Hello everybody, good afternoon and welcome back for the 6th Annual Energy Storage Summit. So as always, before we move on to the crux of our panel session, I'd just like to remind everybody that we do have a questions function. So if you have any questions for our panelists during the session, we'll get round to them towards the end. We have 45 minutes for the session and I think it'll be a really interesting one. So around financing again, but particularly focusing on merchant projects, which is obviously a very hot topic for the industry. So without further ado, I'll hand over to our moderator, Carina Radford, who will introduce herself and then pass on to the other panelists to give their intros. Hi, Carina, welcome on board.
Thanks, Lucy. Thanks very much for that. And hello, everybody. If only I could see you all, but it's nice to be here this afternoon. My name is Carina Radford. I'm a partner at White & Case. I really work across a broad range of energy projects across the sort of financing, from the project financing really all the way through to structured equity. So it's a topic that's close to my heart. And I have a fantastic panel as well to have a conversation with this afternoon. So I want to hand over to them to be able to introduce themselves. So maybe I can start with the first photo, which is Stephane Tetot, if you want to introduce yourself. You're on mute, Stephane. There was always going to be one, Stephane. That's fine. You've done that now. We've got that out the way.
Yeah, exactly. It's done. So hi, everyone. Hi, Carina. I'm delighted to be on this panel today. I'm a director at BlackRock Infrastructure and with a particular focus on renewable power. So I'll be delighted to explain to you how we look at merchant projects.
Fantastic. And some of you may have already heard from Julian, but Julian, for others, do you want to introduce yourself again?
Sure. Thanks, Carina. Yeah, my name is Julian Lynn. I am a regional head for UK Export Finance, and past role was underwriting our 3 offshore wind projects in Taiwan. So delighted to be on the panel. Thank you.
Thanks, Julian. And sporting different facial hair, I think, to your photo, Jonty. I couldn't help but notice it. Do you want to introduce yourself as well?
Yeah, absolutely. I think I'm due a new LinkedIn photo, or maybe a shave, who knows. Yeah, good afternoon, everyone. I'm Jonty Lovell, so I'm an investment manager at Foresight Group. So I've been at Foresight just over 5 years now. I've worked across various different deals in the renewables sector, but more recently have had a focus on the flexibility sector. So worked on Foresight's 2 first storage acquisitions back in 2017, and yesterday actually closed a deal on behalf of the JLEN fund in the storage sector as well. So I'm kind of leading things at Foresight in terms of new acquisitions in the storage sector. Yeah, so delighted to be on the panel and look forward to the discussion.
Thank you, Jonty, and congratulations on closing the deal yesterday. And last but not least, Olivier, do you want to introduce yourself?
Hi, good afternoon, everybody. For those who don't know me, my name is Olivier Fricot. I work at Investec, where I'm a coverage director, and I look after primarily debt product. We've done a few things in the storage space over the past couple of years, and when it comes to merchant financing, we're whether it's in renewable, thermal, we're institutionally very active, and the last financing we closed was firmly into that category recently, although it's not public yet.
Okay, well, there's a clue to me to not ask you too much about it then, Olivier. So as Lucy mentioned, we're keen to have your questions and comments. Please do post them in the chat box. I'll do my best to pick them up at the right time, and if not, then certainly we'll try and leave some time at the end for some Q&A. So maybe let's just sort of set the scene, shall we? I mean, the title of this session is somewhat leading in the sense of financing having taken a hit. But I would be grateful to just understand your view of what really the current state of the financing market is for storage. So maybe, Olivier, I'll start with you, and just your views of really what the state of the nation, if you like, is at the moment.
So I think first, financing on a merchant basis is not necessarily the easiest of things. So a lot of power and infrastructure investors, where on the debt or equity side, have been sort of bred with effectively long-term fixed cash flow, whether it's feed-in tariff or sort of a government-backed contract on a long-term basis. So if you look at the context, people active in and prepared to take a proper merchant risk is a small subset of that sector. So as a starting point, it can be challenging. I think what makes battery more challenging is it is new. So naturally, for new thing, people will be more conservative. And I think if you look at some of the subset of the I guess the revenue stacks, some of those revenues are well known. Others are much harder to pin down. And what we find difficult at our end is some of those markets are actually fairly shallow and not particularly deep. So it's quite easy to see very credible revenue stack now disappearing because of a simple law of supply and demand. So overall, we haven't seen much, and the challenge we have, the main challenge for us has been putting the gearing up, and as a result, I think when it comes to investors, do they want to bother with a debt package which is going to be at sort of 30-40% gearing? I guess if you've got enough equity to fund, say, 65% of your project, it doesn't take long to think, well, let me fund 100%. So that's been one of the main challenge. What we are hoping for is that as the market evolve and as I guess OPEX reduce and capex reduce, then the gearing figures will naturally increase, and it will start making debt more attractive to equity sponsor, and things will start. So I guess for me, the question is not about if, it's more about when. And if I was a betting man, I'd say, over the next 2-3 years, things will look very differently.
There's some interesting points in there, Olivier, and maybe we'll come back to some of those points to unpack them a little bit. But Jonty, you're fresh from a win, right? You've closed a transaction yesterday. So, I mean, just your views really before we move on. I mean, some of the points Olivier made, I know you share, but what's your view of where we are at the moment in terms of financing storage?
Absolutely, I think. I mean, to clarify, the acquisition that we made and we see making over the kind of short term are on a kind of all equity basis. Yeah, I think we certainly feel that the fundamentals are there, and they've been there for a while. Clearly, with the decarbonisation agenda and the move to net zero by 2050, we're going to see an increasing level of renewables come online that is going to be displacing kind of existing thermal generation, which is only going to increase the intermittency of generation going forward, which is ultimately clearly going to put a strain on the network and increase the level of volatility on the network, which A, drives a need for storage, and B, we believe drives kind of value in storage. Now clearly that story has been around for a while, and I guess until recently there's not been a huge amount of kind of M&A activity in the sector. We saw in 2016 with the EFR tender, there was a kind of a bit of a kickstart in project finance in equity financiers getting involved in projects, because those projects had kind of a greater degree of contracted revenues. And since then, obviously, there was only one EFR tender. We've seen a bit of a lull in the market, but I do feel over the last kind of 6 to 12 months, there's been a bit of a turning point in the sector, where kind of economics have started to become more viable. Certainly for equity providers. I think the two key things there that are driving that change. One, as Olivier sort of mentioned, declining cost, declining capex. We've seen quite a drastic reduction in capex over the past 3 years. So much so that we now believe that there are kind of levels that can support viable projects. And the other point is around the offtake solution. There are clearly a number of route to market providers in the space of different sizes and different offerings. But what we've seen is certainly a development of those trading platforms and the business cases, and a kind of a demonstrable track record that these parties are able to demonstrate over the past 18 to 24 months, which is helping equity providers get comfortable with the type of use cases. Before that, it was very much taking them at their word, whereas now there is kind of a track record that can be demonstrated. And to go to Olivier's point about the shallow market, yes, there are balancing services that are available today that the pricing may reduce over time as there's an increasing deployment of batteries. I guess the key point there is that the much wider, deeper market is the wholesale market and the balancing mechanism, and we believe that they are much deeper markets that can support a much larger battery build out than say the balancing services, and I say that's where we see the value long term in these assets. So clearly, as I say, we funded on an all equity basis. I think to date we've seen pretty limited kind of activity in terms of lenders in the space as well.
Mm-hmm. No, understood. I mean, we focus on project finance, of course. It loves a long, and as do frankly funds, they love a long-term, relatively stable income stream, which is obviously not what storage makes you think of. I mean, Stephane, what are your views on the sort of the challenges? We will come and talk about the opportunities, which I think is important as well. But just on the current challenges to really get financing off the ground at the moment, what do you see those challenges as being?
So a lot has been said already, so I'll try to complement rather. So ourselves, we manage, our latest mandate is called GRP3, and we manage $4 billion of US dollar, and we can invest across the globe. And battery projects are part of the investment remit. And what is important for us is the scale. Scale is important for us, and it's true we don't need financing when sometimes financing doesn't actually increase in a meaningful way the project IRR. We're interested in long-term cash flows that are uncorrelated to capital markets, but as well to the other wind farms and solar projects that we buy, because from a portfolio construction standpoint, it just makes sense. So we are really, let's say, working hard to find those projects. And one parameter as well to have in mind is the inflation linkage. That's very appealing for our investors that are typically pension fund, life insurance companies with liability linked liability structure. So it's true that we try to look at those projects. We know that it's coming. That's why when we initiated this mandate 2 years ago, we wanted to have it. But it's true that for standalone project at scale, we have not found them yet. So that's why we are more trying to have, like, let's say, co-location with other technologies such as wind farms or solar projects in the rise of private PPAs, where subsidies are dropping, and all of a sudden you got large conglomerates, electro-intensive, looking for PPAs, where the production profile suit them a bit better than just like a simple wind farm. And I think we are quite positive on the sector based on two drivers. So the first one is carbon price. So you can see that the carbon price throughout Europe are very high. So we're expecting coal-fired plants to have difficulties to operate and provide that base loads. So volatility in power price are expected to increase, and we are already seeing it. The UK market is the best example, given the number of days the coal-fired plants managed to produce electricity last year. And more importantly, the upcoming regulation about EU taxonomy. You know, that will be the scheme to support the net zero vision of the EU Commission. That is going to, let's say, really like make a distinction between activities that have, let's say, a trajectory that is acceptable and the one that need to be penalized. And we are already seeing large industrial trying to be proactive and find themselves at PPAs. So around standard batteries, around services to the grids at scale, I think we are struggling a bit to see the opportunity, but for co-location, definitely.
No, that's very interesting. And maybe, Julian, I can come to you because, I mean, Jonty obviously mentioned the decarbonisation drive and the fact that, you know, there is a lot of desire, and I think Olivier mentioned this, that financiers want to find the way to finance the storage market. I mean, I think that there's definitely a desire there. I think everyone would agree. The challenge, of course, is the classic approach to long-term, you know, stable cash flows, which at the moment, I think we're all saying perhaps is a bit tricky to galvanise without, frankly, eradicating the equity upside to these sorts of projects. From your perspective, Julian, looking at the role of the UKEF and financing these things and moving from a very traditional project finance background, where do you see the sort of the challenges and opportunities? And Stephane mentioned co-location, which I think is an interesting topic for you as well.
Yeah, indeed. I mean, firstly, UKEF, like other ECAs, is best suited to grid scale opportunities, and where you're trying to mobilize quite literally billions of dollars, these wind projects are vast. And the reason people have used ECAs is to basically manage a mix of both technical and regulatory risk. So you're making a big bet on a big market with new or relatively new technology. Beyond that, supply chains and being able to deliver a large scale solution, as we're talking about here. So we've had quite a good time. It's been a feed-in tariff-based financing. But having said that, UKEF, I think, certainly feels the pressure to support the next phase of, sustainable energy in terms of having optimized energy, which involves storage solutions. So in terms of where we see that happening, one is, as I mentioned, we've got these off-grid solutions in rural Africa, which is a small micro solutions. Corporate structures where you're rolling out a rooftop scheme and you want to install it. And then finally, maybe as we're hearing here, whether there's grid scale opportunities to do that. So breaking into that, I think from the UKEF side is a very strong willingness to work with any and all entities. Some of the big, fantastic names here on the panel, but all of the supply chain to say, okay, if you've got a risk there that you want to launch this type of thing, you see the opportunity, but there's some risks you want to cover off, you know, we're here to try and bridge that for you. There's no doubt about that. And in terms of generating a yield, a return, which is partially wrapped by UKEF guarantee or support on that, potentially in a world where we don't even have PPAs, you know, you're just potentially just selling your power sort of thing, or a reduced PPA obligation. You know, we're very keen to look at that as well. But we're not been really, as you said, being able to lead that charge. And it's great to have that kind of discussion now and hear where the needs and demands are.
No, it's interesting. And you mentioned feed-in tariffs. And obviously, I want to just touch a little bit on the parallels with the sort of broader renewable energy finance. I mean, of course, we all saw those years of beautiful feed-in tariffs that made everything very possible in the early stages of financing renewable energy. But we do know that there's lots of merchant-based renewable energy projects out there, which, you know, people still raise an eyebrow to, but most people are able to finance. I mean, Olivier, you've spoken before about your appetite for risk in that area, but that is somehow distinguishable from the appetite for risk, obviously, in storage. But maybe you can touch on the parallels there about, you know, how do people get comfortable in merchant risk more broadly, and is there a way of sort of translating that across into the storage model? And you're on mute, Olivier. Sorry, no, it's fine.
Sorry for that. No, I think, I mean, you need to look at every new market comes with challenge, and you mentioned sort of, you know, first feed-in tariff project in the UK. I mean, some questions that some bankers had may look very. You look at if you were to look at them now, you'd say, really. But so I think a lot will be into explaining in simple terms how those markets are going. And I think because debt funders look at the world in an half-empty fashion, being into a position or being able to articulate a downside case that is rock solid will be absolutely critical. I think if I you know, you look at what Jonty said around, you know, this current market, but what Foresight sees is the wholesale market, which is much deeper. I think this is an approach that we've been taking when we engage with sponsors and say, look, we know you're going to operate into this market because you want to maximize your equity returns, so that's fine. But the way we look at it is, well, like if everything goes the wrong way, where would you operate? And that is wholesale market, and that's how we build our downside scenario. And the good thing about that is, I think if you sit down with an investor or a credit officer, you can actually explain that reasonably in reasonably simple terms, which is, you know, at night power price power is abundant, power prices are low. You buy the power at that time, and then first thing in the morning you sell the power. You repeat that maybe in the evening, and you repeat that for, you know, 365 days a year, and that gives you a cash flow base that everybody can figure out. So now when it comes to challenge, if you look at merchant, what is going on in the renewable world, I think people implicitly in the renewable know that those assets are extremely long dated when it comes to their lives. So if you size a repayment profile over 15 years, even if a power price do not materialize, you know you've got a very long tail for a wind project or a solar project, and you can run pretty drastic sensitivities when it comes to effectively getting your money back. One of the challenge with battery, certainly from our standpoint, is the fact that after, you know, call it 10 years, those batteries will need material replacement. I think all sponsors say, look, we're gonna change the battery pack, and the grid is there, the balance of plant is there, therefore it's going to be fine. And we agree with that. It's just as an initial financing, you know, if you ask people to take merchant risk and effectively an upgrade risk and finance that, it becomes awfully complicated. So I think where the industry will, from an evolutionary standpoint, the industry probably will start by a conservative structure in terms of gearing, in terms of notional tenor, in terms of cash sweep features that you may see. But if you fast forward a few years, in the same way as, you know, wind or solar project used to be, I think if you look 10 years ago, a wind project would have maybe you know, 3 to 5 years tail. I mean, these days people talk happily about negative tail. And I can see the same happening in battery when the market has evolved. At this moment in time, I think you will start as the initial financing will be more conservative, and I think it will still make sense from an equity standpoint, because we see a significant pricing differential between a debt piece and an equity piece, and it will be in the same way as we've seen in thermal space, where people refinance their asset every 3 to 5 years. You will see the same in battery. But the industry, well, the lending side of the equation needs to start, and it will have to start conservatively.
No, you make a very interesting point. I mean, I think we've learned a lot in the renewable energy space, and there's lots of structures there which are now used to mitigate merchant tail, or and the tail's getting longer, as you say. And so some of those would definitely work. But you also make an interesting point about the sort of multiplicity of risks. And maybe, Jonty, I can just talk about technology risk for a second, or renewal risk, if you like. We talk about CapEx going down, which is a positive, but there's also cheaper and more effective technologies that are coming online, which obviously makes the competition greater, along with some of the natural technological or asset-based risks that Olivier is talking about as well. What are your views on how that plays into the financeability or investability of these assets?
Yeah, so I think the technical risk and the cost of CapEx coming down is certainly something that we've looked at, and you need to ensure that you're sort of amortizing your cost of your CapEx quicker than the cost of new equipment is declining. And we've done plenty of analysis on that. I guess there is an inherent, CapEx cost can only come down so far. Obviously, the cost of sales can continue to come down, but the sales as an overall cost of the wider CapEx piece becomes less and less. And there's other kind of key equipment in there, transformers, inverters, other kind of the containers themselves, the grid connection, that clearly isn't going to be coming down at the same rate. And they're sort of much more mature technologies that are sort of plateaued, I guess, in terms of cost. And that means that, I guess in our view, the level of cost is the decline in costs can only go so far in terms of total EPC prices, which gives some comfort to that point there. But it is a key concern that we kind of reviewed in our analysis, and clearly there's a sticking point with our investment committee. The point around technological risk, I guess for us, it's a new application of a technology. It's on a much larger scale than has really been proven previously. But there are projects now that have been online for 6 years, and I guess that the battery manufacturers have demonstrated performance of assets over that period. We believe that the risk can be kind of appropriately mitigated through kind of construction contracts and the equipment supply contracts through performance guarantees and warranties, and appropriate kind of protection under those kind of EPC or construction contracts, which sort of somewhat mitigate those technological risks. I think generally the risk of the asset class, you compare it to, I don't know, construction onshore wind projects. It's not particularly complex in terms of the construction process. And so whilst yes, it's a new technology, we actually believe that in some respects the risk, the technological risk, is lower, because they really are just sort of plug and play assets that they're very scalable and easy to design and build. And so that's another factor sort of that supports the business case.
No, that's interesting, and that's right. I mean, the state of the construction market or the equipment supply market is something that financiers have long looked at for all of these assets, and it's a particularly interesting one here in terms of the ability to stand behind with appropriate warranties or creditworthiness, of course, in terms of some of the suppliers. But Stephane, maybe just to pick up on that, I mean, in terms of the framework for support, you touched on the EU just briefly earlier on. I mean, is that really, and this is perhaps a sensitive topic for Julian, but maybe we can ask Julian's views in a minute. Do we think that the governments really should be producing something along the lines of support, perhaps by way of some sort of subsidy support or otherwise, for this sector to really get it off the ground? Do we think that's something that people should be looking to?
Well, I guess the sector tried to ask for it for quite some time now. And it's true that most of the equipment suppliers are not coming from Europe. So maybe it's like a bit this, let's say, initial engineering base that can advocate for that technology. You can see that hydrogen, where most of the skills are based in Europe, managed to get support during the crisis, because energy is often, let's say, part of the solution. Each time there is a crisis, okay, let's do a bit of infra, create jobs, create like local contents. And it was quite interesting to see that Europe decided to focus on hydrogen rather than battery storage, even though there is a need for a flexible generation. So if battery storage missed the boat with the COVID-19, I'm not sure you're going to see any support outside, let's say, maybe like some isolated tenders, like the EFA scheme that we've come across in the UK, or maybe the one in Ireland, because actually this is like an isolated system due to its geographical location. But I just wanted to maybe like to debate with you, Jonty, on the cost of battery, because we have seen it with PV modules, with turbines, with offshore turbines. We often say that the price of equipment decreased. No, actually, the price of a single turbine has not even changed. It's just the scale of the megawatts. 2 weeks ago, Vestas announced its 15 megawatt, 1.5 offshore turbine. Like 7 years ago, it was 5. Now the 5 megawatt is almost like the onshore standard for when you develop a brand new site. So I'm expecting to see the concept of competitive battery storage, not really from a cost standpoint, because the cost is not really the issue, but more the ratio between efficiency and cost. And I'm expecting a bit like what Olivier said when we used to have like a feed-in tariff for PV system in the UK, where people were saying, but there is just not enough sunlight in the UK. You don't really need a fit. I'm expecting that in the next 3-5 years, you will see much more efficiency from the battery storage, because you've got more and more people looking at it every day. So you are going to have the Moore law being applied to industrialization process. And on our side, so we try to stay close to the asset class, but where we are a bit open is the distinction between focusing on asset only versus platform, because we see a lot of let's say rationale for those battery technologies to be to keep their assets, to have an integrated approach where even if there are some merchant cash flows, they can actually drive the performance of those merchant cash flows internally through digitalization and proper monetization. So that's why we are, I would say, at this stage, because the assets tend to be quite small, we tend maybe to look at it more from a platform standpoint.
Yeah, that's interesting. And maybe Julian, just a quick question, and then on the government side. I mean, obviously the EU sort of pledged 2.9 billion, didn't it, last year to support battery development, shall we say, across the EU. Do you think there's a role for governments in trying to sort of stimulate, if you like, financing in this area, whether it's through tax breaks or whether it's through, I mean, I know the UK government, for example, passed some very useful legislation last year to alleviate some of the restrictions on planning commissions, for example, in the UK, which obviously has paved the way through to larger projects. Well, I mean, obviously that's exactly what you do day to day, but what are your thoughts more broadly on where governments play a role in this?
Absolutely. Could be a little bit above my pay grade, Corinne, but to be honest, it never stopped me voicing an opinion. But absolutely, this is a super critical, super pivotal time for all of this to be discovered. As you said, hydrogen being looked at as a first storage solution in itself, possibly generated through wind and solar. So there's an entire mix going on and a review of how we optimize that technology. You've heard Boris Johnson's 10-point plan. I mean, it's at the heart of the innovation and technology. So if there is any case from any supplier or entity that says, look, you know, I can take this solution to the next level, but I'm going to need help to do that, now is the time to do that. There are various government departments, BEIS, which is the Business for Enterprise Industry, DIT sector teams, which are specializing in hydrogen and storage as well, looking at the UK supply chain and innovation and needs they have. And then, of course, us right across government, there is a huge amount of interest. So it's very important that associations like yours or members make their views very clear about what they think they need to take this sort of thing forward. But certainly, I think the door is open, and there would be a very receptive audience to that discussion.
Well, thank you. You heard it here first. Lobby the UK government for support. I think that's what you said, right, Julian? So
absolutely.
Maybe before we move on, and perhaps this is the penultimate question, I just want to talk about geographies for a minute. There are different viewpoints on, you know, the next big thing, which people have said about storage for perhaps the last, I don't know, 5 to 10 years, and actually the need for it, right? And I'm talking about sort of grid scale storage. There's obviously lots of players, and we touched on this in our preparation for this panel, between the world of sort of interconnection on the one hand and the increasing use of renewable energy, obviously, on the other hand, which create different dynamics for the need for storage. Just thinking about geographies for a second, where do you think the opportunities for storage most apply? Maybe Stephane, what are your thoughts on, you know, countries, areas, regions where you see there being a particular need for storage in the closer term, which would obviously create opportunities?
So following Fukushima, you had actually a couple of pledges made by various governments across the globe to phase out nuclear power by 2025. 2025 is tomorrow. So all those governments are actually trying to see how they can implement that. But I know that Belgium, for instance, said that they will stick to their plan. But I'm not sure they got, let's say, contingent capacities to procure alternative source of energy. So that will be an interesting one, and I'm pretty sure like volatility will come in to the market, and it will drive actually requirement for flexible generation. But it's just one example. I know that we are in the UK. We are trying to build those, let's say, to become the Saudi Arabia of offshore winds. When you see that the country is almost like an isolated system, and if all of a sudden it generates electricity, where are you going to put it? So you can see that almost every, let's say, country will need it.
No, that's interesting.
Maybe at different point in time, though.
No, absolutely, and then for different reasons, possibly. I mean, when you and I spoke before, we talked about this.
Islands really strike my mind as being, let's say, an isolated system in a windy regime with very limited interconnection point to the UK, who might not need that much energy. So,
yeah. That's true. That's a fair point. You know, when we talked before, Stephane, we talked about lots of different reasons why it might be, like, for example, the decommissioning of coal in certain parts of Germany, for example. Olivier, what are your thoughts on geography?
I mean, I think it will be a bit of everywhere. My bet would be more into places where there's a lot of unsubsidized renewable coming. So I think, if I was a betting man, we see an awful lot of activity in Spain, in solar, and to some extent in wind as well. And I could see a lot of it going there, just by developers sort of having to start sort of improving their ability to sell electricity by storing and get their supply curve widened. I think in Ireland, generally UK and Ireland, because of their nature, probably. But I think what we've seen during COVID, which has been a real test of what could look like in 5 years' time, because effectively you will have more renewable and more power, and the reduction in demand meant less power with renewable. What we saw is the gas-fired asset still made a lot of money during that phase, surprisingly. And I think one of the challenge of battery is the duration question. When you've got a battery that has got a 1 to 2 hours duration, and you've got period where it's not windy for potentially days, then at the moment there is no real alternative. And I think that's why ultimately hydrogen meets a lot of ticks a lot of boxes. And I can understand this sort of being French. I can understand the dirigist state of affair in Europe, and combined to I guess the Germanic view of industrial scalability. But ultimately, hydrogen allows to store energy on longer scale. And I think everything we've seen to date regarding batteries is that, it's okay for short duration, but when it comes to longer duration and seasonal duration, it is far more challenging.
Mm-hmm. No, that's interesting.
But I think short term, as I said, countries where there's a lot of renewable coming, driven by behind or sort of collocation, and system or countries that are under pressure due to island nature and tightening margins. So
that's helpful. That's very interesting, actually. I mean, Jonty, maybe I just put that same question to you, but also to add any final thoughts. I mean, we've talked about sort of patching the network being, great use of batteries, and I think Olivier is sort of alluding to that. What are your thoughts on where is battery storage going to be, the answer, and any further thoughts you have on opportunities or final thoughts?
Yeah, absolutely. So I think certainly at the moment the kind of key area of focus for us is the UK. Clearly there's a similar case for the UK can be made for Ireland. And with the DS3 auction, there is a kind of other benefits to that as well. I think really the reason, as both Olivier and Stephane have outlined, it is due to it being an isolated grid system with less interconnection, less levels of interconnection than, say, continental Europe. I think we generally see interconnection as almost a competing technology to renewables in terms of its sort of the two kind of cannibalizing each other's revenue streams or value share, if you like. And given the kind of the ingrained level of interconnection on the European energy market, we see it challenging to make a case for battery storage, certainly at the moment. Clearly, as we move to net zero by 2050, or whether that's achieved or not, we will see an increasing level of renewables penetration, which will drive an increase in case for storage in the European market. Another market that we've been looking at that we believe is quite appears to be active at the moment is the Australian market, which I think is due to, there are points of real strain in the Australian market now as they move to adopt kind of an increasing level of renewables on their system. So that's quite an interesting market at the moment. But yeah, so I think the opportunity in Europe at the moment seems to be kind of one-off. There are assets that we've seen, but they're very reliant on kind of grid balancing contracts as opposed to sort of wholesale trading.
Oh, that's interesting. And Australia is close to our heart, having closed the world's largest battery project at the beginning of this week. So I definitely know a lot of my colleagues will be trying to get some sleep after that one. Julian, just final thoughts from you, really. We've got just 3 minutes left. I just want some final thoughts on what developers might look for, what opportunities they may be, how to present, project opportunities, etc. Anything you want to add?
Absolutely. No, I think it's, as you said, a very interesting run through the opportunities. I mean, we look at the world not just through the technological channels we've discussed, but a global remit. Where are these opportunities going to happen? I think certainly Australia is where we'll see the first commercial hydrogen applications. Whether we leapfrog into that technology, absolutely. The UK's got leading electrolyzer expertise, and there's stories of maybe that's how we try and prove up a storage solution. Equally, I think the renewable energy world will rapidly fragment, and battery solutions will find an avenue. And we are here to support wherever that might be, but certainly sort of looking at rural off-grid location battery solutions, perhaps smaller scale. And then we're looking, as Olivier was mentioning, at floating offshore wind, the next generation of wind turbines. I mean, these are going to be huge. Let's put them on the Eiffel Tower, 20 megawatts. So yeah, a huge world of opportunity, a lot to try and work out what's working where and how to best focus it. But we are certainly ready to support wherever that looks like, and to take our fair share of the risk in trying to see if we can make that work.
That's great. So Olivier, turbines on the Eiffel Tower was Julian's last thought. Anything from you?
Yeah.
Anything from you?
No, I think a lot has been said, and it's clear is world is going green, and there's going to be a lot of investments, debt, equity, and storage is a big part of the equation, because what we've seen now is, whether it's wind or solar, it's pretty much competitive. So the next big equation is storing the energy. And once you've sorted that out and invested, and that's all good.
Absolutely. Okay, Stephane, final thoughts with you. On mute, sadly, Stephane. There you go.
So the current crisis led to, let's say, a huge interest coming from institutional investors to commit capital, primarily driven by yield environment being extremely low, even lower than 18 months ago. So I'm expecting, let's say, huge capital raise from infrastructure type investors looking to invest in wind and solar. And they will need actually to find other sectors, because even though wind and solar goes fast, you still have the building permit cycle in order to be able to build your project. And that pot of capital is going to, make some tests, and battery will definitely be one of the winners.
Okay, fantastic. Well, I think if I've got it right, we're out of time. Lucy will tell me if I'm wrong, I'm sure. But thank you all so much for having this conversation with me. I apologize if I didn't get to any questions in the end, given the time that we had. But really, it's been fantastic talking to all of you on this topic today. So Lucy, back to you.
Great. Thank you so much, Carina, and thank you to everybody for your thoughts and your insight. As always, yeah, we unfortunately always run out of time. But of course, I'm sure you can reach out to any of the speakers for follow-up conversations, either on LinkedIn or the portal or whatever, and they'd be happy to continue the conversation. As always, thank you for your questions and thank you for listening. And we will be back for the last two sessions of the day, which are case studies focusing on behind the meter opportunities for storage in Europe. And that's with the CEO of the Equity Platform. And then we have a co-located wind plus storage project with Scottish Power Renewables. So we hope to see you all back, and thank you very much for listening. Thank you, everybody.
Okay.
Bye-bye.
Cheers.
Bye-bye.
Bye-bye.
Bye.